All right, everything looking good here. Welcome back to the channel for our Friday market wrap up. Crypto trend trader. Before we get started today, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Going to keep it a little bit shorter than usual, so probably about like an hour max, maybe hour and a half too, and we'll kind of roll from there. Obviously, been a lot of volatility in the markets. We saw like basically a sideways week in traditional markets, a big down week in crypto. But before we get started with all that, let's jump in with the 10-year. 10-year is still just kind of going sideways here, just like we anticipated. We're expecting the bottom of the range to be like this 1.46 level, and the top of the range to be just above 2, maybe 2.1. Essentially just oscillating between these two key Fibonacci levels. We are starting to approach the bottom line of the channel here in white. So we would expect that to act as like a little bit of forward pressure back to the upside. But as far as I'm concerned right now, this looks a lot like a bullish reset to me. You'll notice that we haven't had the bearish control zone in effect since essentially we bottomed out here. So all through this move upwards, the bulls were clearly in control, momentum, everything. But now we're back down at the bottom of the range and price action is just going sideways. So essentially the reason I call that a bullish reset is because price isn't really selling off, but the indicator is. So eventually when the indicator starts going up again, there's been almost no pressure down on price, but a lot of pressure down on the indicators. Therefore, they have a lot more room to run back to the upside when they're ready. So, and then just flipping over real quick to the dollar DXY, you'll notice also again on the daily here, we've gotten that move down to the bottom of the range. We're essentially getting ready to close this out for the week here in about 4 hours. So it'll be like Eastern Standard Time, 7 p.m. tonight. I expect a similar situation like this where we would potentially get like a wick back up, and then closing essentially like at this level here around like 91. Now, granted, we could still sell off further. This was just the anticipated level that I had put this in effect for, where I thought price action would come down to or could come back down to. But I do expect, similarly, this ascending broadening wedge pattern to hold. If we do get a breakdown out of it, that's fine too. I'm not going to get like overly bearish on this. There's always a possibility it opens back up, on Monday, back inside of the range. But as far as I'm concerned, I would need to see a break confirmation and then continuation in one direction or the other before I would get like overly bullish or bearish on this chart. We are still below the 200 exponential and simple moving averages. They are still sloped to the downside. But again, the longer we hang out close to them, the more likely they are to flip back over. Typically, when you get a rejection from like specifically a 200 moving average, it's usually extremely violent, as where like the first time we got a rejection here, we got like a slight sell-off and then we broke through them, and now we've gotten a more violent sell-off. So, I would essentially expect this to run out of strength now and then come back up and sort of like bounce at them and then finally break through. Now, again, that does not have to happen, but again, it looks like, to me on the daily, looks like a bullish reset. We were all the way at the top of the range on both these indicators, and now we're back down at the bottom of the range, well under the zero marks, starting to essentially like level back out. Now, obviously, this is a more aggressive selling candle coming in today, but, I'm not ready to just... The way I look at it is a lot of times you'll see like a continued trend to the downside, and then you'll see one last big push. And that's usually like when divergence develops, or like, the final squeeze comes out. And then after that, you'll see it get bought up, or you'll see the strength come back to the upside. So that's what I'm anticipating essentially happening in this market. So let's look at our traditional markets, and then we'll just kind of roll through our various assets. If we look here on the Dow Jones, basically Dow Jones, we essentially got like a fairly bearish candle coming yesterday. And now here comes a bullish one again, still at the top of the range, still clearly, showing some weakness on the TJD, TDMACD, obviously still in the bullish control zone. We got the hard sell, but we have not exited that zone yet. So, I would expect this to close near the top of the range here. If we just flip over to the weekly and just kind of get a look at it too, weekly candle doesn't look bad. The only thing I'm paying attention to here really on the weekly is we do have the hard buy at the top of the range. Like essentially we're at 95.7 out of 100 maximum on this indicator. So, to get the hard buy at the very top of the range right there, you're not going to see a lot of follow through here, as what we would need is essentially what we were just talking about, a bullish reset where the indicators and oscillators kind of cool back down, price goes sideways, and then you can see like continuation to the upside. But you can't continue if you don't have any gas in the tank. And that's essentially what that, 97 range means. There's very little gas left in the tank. So, and then the S&P, again on the daily, we got a nice bullish candle coming in back to our all-time highs. Again, very top of the range here. If we switch over to the weekly, we're essentially getting that buy again at the top of the range. Once again, we're up here at that 94.9 level, 95 level. So, I mean, we're way at the top of the range here. Likelihood of getting too much more continuation is unlikely. I think it's more realistic that we see like some little sideways cooling down action. I think yesterday's weakness in the markets was, like a knee-jerk reaction basically to Biden's quote-unquote tax hikes. And for a lot of people, I know like they are arguing that, oh, well, that's only going to affect like the super rich. Well, the majority of the money that's in these markets, like speculative, investments inside of all these markets, is those same people's money. So while you may not be a multimillionaire or fall into like the tax bracket over 400,000, whatever it ends up coming back down to, you still have to worry about it because those same people are the ones who are going to be focused on it. And essentially what it does is it eliminates longer term investments because it eliminates the lower rate that you pay on capital gains for holding over 1 year. Instead, it would just be taxed as, less than 1 year capital gains or as regular income. So, that's where people are talking about like that 47%, 57, 60% with state taxes, etc. So, IXIC, NASDAQ, once again at the top of the range, retesting like the previous all-time highs. You guys know how I feel about this. Once again, this one has cooled off a little bit because it topped out a little sooner and now it's floated back up here. So if we get the buy now, we have a little more room to run as opposed to like the other ones. But also, we have potential to build divergence on this one as where we don't on the other indexes. So we'll have to see what happens. I think more likely than not that we would see some weakness in the markets, not necessarily like heavy selling, but at least some weakness while these things kind of cool down. So here's the Russell 2000 daily. Again, this one's been cooling off a little bit, showed a little bit of divergence and then got a fairly heavy sell since then between like these previous couple points here. So that's already played out on the daily. Now we're showing like the most strength that this thing has showed, basically since the break of this potential range here. But going into the weekly, it's got a lot more room to run as it's already left the bullish control zone. It has had a couple weeks of continued selling, but essentially just been going sideways. So it doesn't look like overly bearish or anything like that. I'd say I'm more neutral on the Russell, just fundamentally and technically. So XLE energy sector ETF, basically just this one's just going sideways, cooling down. Got the hard sell towards the bottom of the range. Much less likely to play out. Did break down to a new low. But after that's kind of found a little bit of support here, kind of getting that bounce. But, we got to be careful because we are basically underneath like that steady resistance slash support that we've been acting with here. But more than likely, I think we would probably see a little more continuation to the downside. And then we can kind of like put a little support in, probably get some continuation to the upside long term. But overall, this thing has on the weekly got the hard sell, left the bullish control zone. The last two opportunities where we had the bearish control zone hard buy, there's quite a bit of continuation since then. So I think it's more likely than not that we do see, a little bit of a continued sell-off on this. I'd like to see it come down to like closer to like that 41, 42 range, maybe one of these key Fibonacci levels. And then we could see it kind of like hammer out a bottom and then get some continuation to the upside. But we'll have to see. Overall, bullish on energy long term. Hey, what's going on, brother? Good to see you. YouTube's best kept secret. Yeah, appreciate it. Yeah, I mean, most of the TA that I see, honestly, like on YouTube and around, I don't spend much time on social media or anything like that, but most of the TA I see is literally just other people looking at someone else's TA and then just like repeating it or drawing their chart to match or talking about like, the newest pattern that's trending, etc. And the majority of it is hindsight TA, which the main difference between what I do and what everyone else does is I don't get on here and talk about everything after it happened and pretend like I saw it coming. And I also don't say we could go up, we could go down, and then my next video I don't come back and say, see, I told you we could go up or we could go down. Like, that's the most annoying thing ever. I tell you guys how it is, and typically I give my opinion, but usually I allow like the technicals to kind of determine that. So gold on the daily, paying close attention to this. It is doing what we had spoke about, where we essentially get the break and then come back down. So far it's starting to find some support, find a little support on our horizontal here in white, also slightly broken out of the channel here, but we got to be careful we don't get a situation like this, like a false break and then it sells back off. So I'd rather be a little late to the party than early and then the party doesn't start. So I'm gonna wait and see how this one plays out. I always talk about change in trends. So on the actual like whole trend up here, you'll see we had the bullish control zone, bullish control zone, bullish control zone, bullish control zone, bullish control zone. And then here now we've been selling off for, the better part of a year now. Maybe not a year. When did this top out? Topped out in August. So, it's been basically going sideways to down for some time now. And we had the bearish control zone, bearish control zone, bearish control zone. Aside from this one little like peak of the bulls taking control on that failed breakout, this is the first time bulls have been back in control. So am I like conviction ready to just go long on this and it's like game on? Not really. I'd rather see a little sideways action, consolidation, bullish reset, and then continuation. Because based on like the Stochs right now, there's not a ton of room to run. Now, it's not as exhausted as some of the other indicator oscillators on some of the other markets, but, it needs a little room to run. If we switch over to the weekly also, you'll see we basically got up to this level and have gotten like an indecision or rejection candle. We got the hard buy, but the last time we got the hard buy was basically at the top of the range. And the following week was like a failed breakout and then massive pushback down. And again, you can get a more accurate picture of the chart itself on the weekly here. When we got up to this level before, we got a hard rejection, a hard rejection, a hard rejection that lasted a lot longer all the way down to the bottom. And now here we're getting basically like indecision rejection once again. We'll see how this closes in the next few hours, but more likely than not, based on the actual trend and what's been going on, I would expect another rejection. Even if it just goes sideways here and then next week opens back up, I would expect that to be basically like a push back up, fail, and then rejection back into, the range. So, the range is obviously this channel. We're in a descending channel. We've been in a descending channel. This was just basically bears were in control for long enough that we started to see like a relief rally, but the direction overall is still down, on this time frame that we're paying attention to. Now we are definitely seeing, hard buy coming out of the bearish control zone, multiple green histograms in a row. We're definitely seeing some potential from low levels for this thing to rally and start moving back to the upside on the weekly. But again, that weekly is going to last for a while. We don't need to just rush right in the first sign of strength. So silver, same thing. It's getting rejected slightly harder off the top of the range. It's not even like consolidating outside the range. Again, bearish, bullish control zone rather, for the first time, since like the run up. We basically had like one little flash here, and then we had that massive failed breakout. So, once again, I don't see anything different showing up on the silver chart. It's a little more sideways, a little more neutral than gold is overall. But, you could attribute that to a lot of stuff. You could attribute it to like the, big silver like movement going on right now. You could attribute it to silver being more undervalued throughout like the entire period. So now all of a sudden it's not selling off as heavily. You could attribute it to a lot of things. But overall, still paying attention to essentially like a descending triangle forming on silver or sideways channel, depending how you want to look at it. I expect more likely than not, we're going to come back down, retest either $24 or, maybe like $22.50, somewhere around there. More likely than breakout of this pattern that we've been operating inside of since August. Now, again, I'm okay if that's wrong. I'm more than happy to see silver go to the upside. Obviously, that's the ideal situation. I'm just going like technically off what the charts are saying right now. We had the bullish control zone, hard sell, leaving that zone, capitulation dump, came back up, got essentially like the buy signal towards the top of the range, failed again, And now here we got the hard sell signal again, basically gone sideways since then. So this hasn't even flipped over red on the weekly yet on the TJD TDMACD slope line. So there's still quite a bit of potential to run to the downside. This thing doesn't have to just start taking off to the upside just because it's been going sideways. So, and then the silver gold chart, see if this thing could like kind of reveal any secrets. You know, basically looking at this, let's switch over to the weekly, get a more accurate picture. You know, obviously topped out back here, putting in quite a bit of resistance going down. This is obviously like gold in relation to silver. So gold has been losing value against silver since it topped out on that like massive dump about a year ago. So that was like all-time high. So now we've been selling off for quite some while. Gold has been losing value compared to silver, but now it's broken out of that descending wedge. So now what you would expect to happen is gold to gain value in relation to silver. So here we like basically shot up, got rejected by 21, kind of holding at the 8 here. So we'll see how this weekly closes, but you know, I think more than likely we're going to kind of oscillate inside this range right here, and then we'll get a directional break. But the longer we hang out near the moving average, the more likely it is that we would break through it. So here we got rejected by 21, 21, 21, and then we sold back off heavily. So now when we come up here again, does it mean we have to break through the 21? No, but the more times we test it, the more likely we are to break through it. So, and here we had the 200 exponential and 200 simple in blue fighting us as well. Here we have opportunity to break through the 21, come up, and then retest the 200 exponential and simple once we have broken through the 21 already. So we have like less levels of confluence. We've got the hard buy coming in. You know, this is basically a bottom area being hammered out, and then we put in like a bullish divergence on the weekly between gold and silver. Here again, bullish divergence. We had a low here, we had a much higher low, we had a low here, we had a much lower low. So more than likely, you know, I think this bullish divergence would play out and we would get a pushback up to like key fib level, somewhere around like the 90 to 1 range roughly. But we'll have to see how it plays out. Platinum is showing some decent amount of strength here on the daily, still in that very clear uptrend on the daily. Basically has been going sideways though since we topped out around February. So this one was a little later to the party on its rally, but it's been more consistent. So, you know, this thing was extremely undervalued in my opinion. I think it's likely to get closer to like 1-to-1 on par with gold. It looks more and more like we've bottomed out here on this retracement here, possibly put in the bottom of the floor back here, but I would not rule it out yet that we could still have a decent little dump back here, back down to like closer to 1100, retest this, double bottom or slightly lower low, and then see like continuation inside of that upward channel. URA, Uranium Etf, you know, it's showing a little bit of weakness, but most importantly, what I'm paying attention to is we have a high right here, we have a high right here, we have a high right here, a series of 3 higher highs, and then here we have a high right here, a lower high right here, lower high right here. This bearish divergence, 3 stabs of bearish divergence. You know, it could play out with a heavy sell-off or just like more sideways action to kind of reset. But, you know, this is the situation that I was pointing out very clearly in Bitcoin and crypto before it topped. And look how that played out over the last couple days. It's been like, you know, 20% dumps basically across the board or more, depending on what your like favorite, you know, crypto or shitcoin is, whatever. So, you know, be careful of that. This thing has run far and fast. I'm overall extremely bullish on this, but definitely some potential for downside. SILJ, silver junior miners, talked about this specifically on the daily and also on the weekly. You know, we basically have this descending trend line, finding support consistently on the 200 exponential and simple here in blue. We've had a couple like false breakouts or failed breakouts here in a row, 3 really big ones. So again, you know, when we saw this big green candle come in, you know, my point was let's not get overly bullish on this thing because more than likely what's going to happen is a hard rejection. So, you know, that's so far happened. Not terribly bad, but, you know, we got to wait for this thing to actually break out, potentially like on the weekly, before we see something happen. And, you know, the kind of indecision that we're seeing, the top of the range that we're seeing with silver, gold, you know, most of these metals, I think it's more likely than not that, you know, there's more stuff pointing to the downside here, at least short term, than there is to the upside, in my opinion. Now, that could change in a heartbeat, though. You know, next week, we open up here, go sideways for a little bit, or start pushing to the upside. You know, you might hear a completely different tune out of me. So, THCX, this is basically just a cannabis ETF. This one's got some of the top names in it. You can kind of look into what's in these specifically, but if you don't want to bet on just one of them in specific, this is a better opportunity to kind of like capture some of the tops in the market, top like cannabis stocks, I should say. Also, with the ETFs, you have a little more diversity, as where some of like the actual cannabis stocks are just like growers or distributors or like stores. You know, if you get into like the ETFs, you can get a little bit more into like the whole industry as a whole and kind of capture like little bits of each of the portions of the sector. So THCX is one of the ones I pay attention to, obviously in a very clear downtrend, in a macro uptrend, getting closer to the 200 exponential and simple moving averages, obviously very clearly in the bearish control zone, looking very close to getting the cross back to the upside. It's not going to happen probably today in the next few hours, but assuming that there's like, you know, neutral to positive action next week at the start of the week, I would expect the hard buy signal coming out of potentially like the bearish control zone, and you know, at least a few days to weeks of continued price action to the upside. But what we're really looking to happen is we want to get back above the 8 and 21, potentially get the cross back to the upside. We want to take out like this 2250 level. But, you know, obviously, if you believe this is in a macro overall uptrend, you know, the best areas to buy are the areas where the bears are in control. You just don't want to go too hard, too fast on this thing. And then, you know, you bought this because you saw the bears were back in control, and then we break out of it, and then we just put in a lower low. But once again, if we pay attention here, you know, no bearish divergence taking place on this ETF itself, but we do see some bullish divergence rather taking place on some of like the individual stocks. So paying close attention to that. You know, obviously I've started dipping my toes back into the cannabis sector, as you know, some of these things are looking closer and closer to bottoming out, or at least nice value levels. So this is YOLO once again. You know, pure cannabis ETF. Same thing, a little different. You can look and see what's made up in them and see if you have a preference one way or the other. It's not financial advice, not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Just a couple of the ones that I specifically pay attention to. It is worth note that there's a gap down here back at like $18 that has not been closed on this. More than likely, you know, I think it will get closed eventually, but it is possible it'll be a breakaway gap and we'll get close enough to it and then continuation. But chart looks very similar. You know, not actually displaying any bearish divergence or anything. You know, and that's, or bullish divergence, I'm sorry. That's sometimes why it's important to look at like an ETF over like a specific stock, because, you know, you might see one of the more bullish stocks having some bullish divergence develop. You might see some of the more bearish ones having like confluence between, you know, the indicators, oscillators, and price action. And then when you look at something like an ETF, you can get a more accurate picture of the overall market as opposed to just one specific stock. So, but overall, definitely back in the value areas, has had a pretty heavy sell-off market-wide in this. And then one thing I also like about the cannabis market specifically is it tends to be like a little less correlated to traditional markets. You know, crypto and Bitcoin with traditional markets are basically like hand in hand at this point in time. Although there was like some weird kind of sideways action while the markets continued up, you know, we've seen like very close correlation between them of late, especially. As where these have been sort of uncorrelated. They topped out way before traditional markets or, you know, anything did previously in their little bull run back in, was it 2017, 2018? I can't even remember now when they topped out. And since then, you know, they have rallied, but not as hard. Some of them have rallied fast, and they're definitely starting to look like they have potential back to the upside. Back above 200 exponential, simple moving averages. But, you know, commodity-wise, I think these are looking to make some serious moves here in the near future. Caterpillar next. Caterpillar is just consolidating at the top of the range. It was showing a little bit of bearish divergence between a couple of these key points here as well. But once again, you know, does this thing have to do like a crypto 20% dump, or can it just kind of go sideways and reset? Either one's possibility. I think it's less likely that this would have like a heavy capitulation, but I do expect some kind of like selling action to come in here. All right, and then let's look at a couple of our key tech stocks, and then we'll get into a quick look at crypto as well. Tesla still getting rejected from our sell zone up here at the 618. Nothing really changing on this one. I still expect it to sell back off. I mean, at this point in time, though, it's like $75, maybe another 10% down. Maybe it doesn't get there. But that's the area I'm still looking at. just left the bullish control zone, got the hard sell signal, getting rejected at a key level, Fibonacci level. Doesn't look particularly strong. Although, we did get a front run on the 200 exponential and simple back here. So more likely than not, potentially come back down to like a same low or higher low. And then, see where like the buying action comes in. NEO got a decent little move up today. Did break out of our little descending triangle that we had been paying attention to. There's obviously still a bunch of key resistance along the way. First main thing we need to see is for it to take out like this 4150 level. I'm still not like overly bullish on this thing, but it's been showing like no life come in for a while now. So we could have continuation to the downside. Maybe this first trade setup plays out. But either way, we have to just kind of play it by ear here. I don't want to get overly bullish on this thing. If it does get a move back up, I expect it to go back up to a lower high and then get rejected. Chinese stock market and economy are not looking particularly good, in my opinion here. So Apple, the Apple move still, in my opinion, is done for now. Got to wait and see how this develops over time. We got the measure move. We got the trade setup that we wanted. Now we're back at very high levels. Basically trying to bounce that cross, trying to stop that, bearish cross from the bullish control zone, the hard sell signal to be printed. Multiple days of red histogram here, but, if we zoom back out and keep in mind on like the overall weekly chart here, what we do? We bounced the 821 cross, we reset the indicator oscillators, and now we're showing some strength come up here. So, a lot of good stuff could happen right here, but we do have 1, 2, and then if we come and put in a new high right here on Apple, come up and get a weekly close above 143, maybe next week, something like that. We'd have 3 drives of bearish divergence here on the weekly. So again, a couple warning signs. Could very easily not play out, but we've already got a couple drives and a decent sell-off coming out of that. So it's not unrealistic to think we get a third drive and even heavier sell-off come in. Pinterest on the daily. We got that move up to the top. We saw this rejection very clearly happening. Came back down, found support exactly where we're talking about. This is essentially like the Tesla chart, what I predict will happen or anticipate will happen. This one's just like a few days in advance. We came back down to that upward sloping, ascending, support line basically, and we've been finding support. Now we have to see what happens. Do we get to take this exact trade again, back up to the upside, or do we sell back off and break down from this? We don't know quite yet. Obviously bullish on Pinterest overall, but you'll see last time we left the bullish control zone, got the hard sell, very heavy selling. Left the bullish control zone, got the hard sell, fairly heavy selling, not quite as heavy, but definitely want to be careful. You don't get wrecked in a position from all-time highs essentially up here. And then once again, we crossed below the slope line here. We haven't lost the slope yet. We're kind of descending down out of a hard sell, bullish control zone. This thing definitely could have continuation to the downside. It's not actually been picking up momentum yet, but definitely has some potential to get back in the game. But we'll have to see. You don't want to see this much weakness coming back up to retest all-time highs, and then all of a sudden it sells back down. But as long as we're trending overall in the micro back up towards the top of the range, potentially looks strong. Zoom, Zoom has basically just been like consistently selling off for months now. Not showing any particularly like strength coming out of this. Below 200 exponential and simple moving average, almost a flat slope on these two things. We could easily move back up to the top of the range here, but I think like getting above 391 to like 440 is going to be extremely difficult. There's a lot of resistance to this area. This looks very, very similar to the gold chart though. I'm not saying they specifically would be correlated, but just like the way the pattern is playing out, we're clearly inside of a range, going down, resetting over time. Overall looks bearish, but there's potential like signs of some bullishness starting to show up in the chart. So all right, and then we can go ahead and get into crypto. We're going to take a look at Bitcoin, futures as well, Doge, ETH, Cardano, XRP, and then we're going to look at Riot Blockchain, MicroStrategy, and Coinbase as well. Hey, good to see you, lazy boy. It's been a while, man. Hope you're doing well. So Bitcoin, obviously bearish divergence has been playing out. Everybody now is talking about this point, this point, bearish divergence, the pattern that's been developing. I didn't hear anybody talking about bearish divergence until after it sold off, which I think is like rather funny. Maybe there was people out there warning about it at a time, but typically I find that people are always looking for a reason. Oh, it's because Turkey banned transactions. That's why this sold off. I'm sure it has nothing to do with technicals and like the very clear indications inside the chart. I'm sure it's Turkey. I'm sure it's regulations. I'm sure that's it. So I guess I just got lucky a lot, like every time. But I don't know. I guess it's Turkey this time. So, but now all of a sudden everybody recognizes what's going on here. Now all of a sudden everybody's looking for targets to the downside and talking about could this trend have topped out. I find it obviously like hilarious because if you could have got out up here at like 63, 64, 65, even 60,000, you had the cross on the daily. Nobody was talking about anything coming out of that. But now once you're down at like 48, 50,000, they're like, yeah, I saw it coming. Now that I'm down $15,000 per Bitcoin. I just think it's absolutely hilarious. Very clear divergence sign was printing. Hard sell, hard buy, hard sell. Clear divergence sign. Very next candle was like capitulation dump. Talk about this all the time too. This candle, people look at it as bullish because so much of it got bought up. Over 50% of it got bought up. I look at it as the opposite. To me, this is like after a massive sell-off like that, I look at it as a reaction rally, like a dead cat bounce. People buy it up, and then we come back down and just fill it back in. We have come down as low as like 47,500. There was two main things that I specifically talked about. This was our all-time high right here. So the key level was not to worry about this one that got taken out on the close, because here everybody was saying as long as we didn't close below this, it was still bullish. But I was expecting us to come back down. But now this is the real one that you're paying attention to, because this is a low and then a new high. This was our high, that was our low, that's our new high. So we don't want to see a close at a lower low than this previous level. Now, there's still a couple hours left before this closes out on CMEs, but obviously, the weekly on this, daily on this is not going to close out until 8 tonight, and then obviously the weekly will still go until Sunday, but we'll have to see how that closes, because that will look bearish to me. If we close below, 51, I was talking about in like the last video, if we close below 51.2 on the daily, it looks bearish because we've now taken out the previous low, and then obviously like key levels after that would be like 45,000. But, I've been talking about this specifically coming back down to like 38 to 45,000 level, finding support potentially somewhere around like the 200 exponential moving average, which is going to correspond obviously with the other thing that we've been talking about, which is how we haven't got a weekly retest of the 21. And again, now I hear everybody talking about the weekly retest of the 21, blah, blah, blah. It's just regurgitation from actual analysts. Very clearly what we spoke about here was on the daily, on the weekly, closing below for the first time the 8 moving average. So here we are, a couple days left on spot markets. But, if we flip over in a second here to Bitcoin futures, we'll see obviously this is an even larger version of that divergence signal. The hard sell, the hard buy, the hard sell. This is on the weekly. We have 1, 2, 3, 4, 5 weeks now of red histograms. Is it possible that we just massively shoot back up and then we get a green week? Yeah, but that's not really going to help me, because what I'm looking at is a bunch of greens in a row followed by 2 reds, then 3 greens in a row followed by 1 red, then 3 greens in a row. And what did I say the whole time? I don't want to see more than 1 red show up, because that shows weakness at the top of the trend. And now here we are 5 weeks into it. I've been talking about this specific situation now for 5 weeks. It's very realistic to me that this histogram sells off all the way back down to the slope line, finds support at the slope line at like 3,283 on the indicator, not on dollars. Sells off out of the bullish control zone, finds support around like the mid-level. Couple weeks sell-off here could easily take us back down to our parabolic SAR. Find support at the pivot right here, find support at the key level, find support at the 21 week. Now, if we come down to the 21 week, I don't think we're just going to touch it and then skyrocket back up. I think it'll be the opposite. I think we'll overshoot it, come down lower, and then we'll find support at it. We won't close below it. That's my opinion, of course. Anything could happen, but it's nice to be able to look at this stuff and expect it like way ahead of time versus like looking at it after it happened and saying, look, I know everybody's down 20%, But look what I found on Twitter. And now we can know why it happened. Because Turkey, because moving averages, because divergence. I do it the other way around. I'll tell you about what's going to happen more than likely ahead of time so you can be prepared for it or position yourself accordingly. So I'm not overly bullish to take positions out of this area right now, but if we go back down to like some of the lower level time frames, I did take a position off of some bullish divergence here. We'll see how it plays out here. We're basically down at that same level, depending on what indicator you look at. This on the 4 hour, we have obviously a low right here and a much lower low right here. And then we're looking like we're potentially bottoming out this pattern. Now, it doesn't have to happen. Again, we're looking at a low right here and then a higher low right here. And then obviously a low right here, much lower low right here. But again, we could easily flip this back over in the next like half hour or start showing a bunch of red histograms again and see continuation. And this was just kind of cooling down. On the 4 hour, we're well below the 528 moving average, finding resistance right now at it, finding resistance at the 8 moving average. So again, could very easily keep stair stepping down. But again, typically weekends are bullish. We had a very heavy sell-off, for the last like few days or week. So more than likely, I think what will happen is like some positive price action over the weekend. But again, don't want to get overly bullish just because of like historically what happens, because we could easily see, a heavy sell-off coming into this. What I'm paying attention to is the pattern that we basically have developing here. We're in a channel with 1, 2, 3 tops right here, and then a capitulation dump, finding some support right here. We broke out of that channel, and now we're back inside of it. So I would expect price action to continue on inside of this ascending channel. Now you could say, well, that's not right. I didn't draw the channel right. It should be a descending broadening wedge. That would make more sense, because then you have, something like this, and we didn't break out of the channel. You're wrong. Well, maybe. But a lot of times too, on like a very strong sell-off like this, what'll happen is you have a big sell-off, an attempt to push back up, and then another sell-off to a new low, and then you'll see like positive price action coming back in as you like squeeze out the last little bit of people, or the people who took like a buy off of that reaction rally. So here I look at it the same way. We had basically a big wick come down, and then we don't come down as low, so we show like strength, and then eventually we're not done selling, so we sell back off. Big wick comes down, people expect, okay, I'm going to buy into this, and then we come down lower, take out the stop losses of the people who tried to enter right here, and then after that show strength and we come back up. So I think more than likely we're probably going to come back up to like 56,000, and then we'll have to see what happens from there. But I think continuation probably to the downside is more likely than not. But I would expect after this much price action to the downside already that now people are going, now everybody's getting bearish. Now everybody's ready to get short. Now everybody's saying 48,000, 40,000, 20,000. Bitcoin goes to zero. Now everybody's coming out of the woodwork after it's already sold off 27%. Now everybody's bearish. Well, what happens after price action sells off 27% and you're already on the right side of the trade? We start to get bullish because you figure, look, what's it going to do? It's going to go down to 33%. It's going to sell off another 6, 7%. Or is it more likely going to bounce back up now? So I think more likely than not, I think the trade here is probably to the upside for like a 10% move back up. And then depending on what altcoin you're looking at, or if it's just Bitcoin, you have to see. But I think this 4 hour divergence has a more than high likelihood chance of playing out back to the upside. So, once again, we'll have to see how it plays out. But in my opinion, I think your trade setup is something a little more like this. If we come back down here and start to like challenge the bottom of the range, start closing below it, what you put in, or I put in, let's say a 3.25% stop loss to the downside. If we break out of the range on a confirmed candle close on 4 hour or the daily, I might get worried that we're going to continue to the downside. But alternatively, 10% reward to the upside, over 3-to-1 risk reward after we've already sold off 28%. Do I think it's more likely we get a 10% move back up, or another whatever percent to the downside? I think probably a move to the upside. Also, spot markets, traditional bullish, going into the weekend. I don't have to explain myself over and over, but I'm just trying to paint the picture of the rationale that we're more likely to get a reaction rally back to the upside. And then if we look at the daily, what did we do here? we way overshot the 89 moving average. So then everybody says, oh, we're going down to the 200. We're going down to 40,000, 100%. It's the next moving average. Well, or we just overshot and then it gets bought back up, and then we close right at it. The same exact thing that we did with the 50 moving average. We way overshot it and then we came all the way back up, closed right at it. But then what happened after that? Continuation to the downside. So could we just see continuation selling? Yeah, that's why we use a stop loss. More than likely what's going to happen though, we bounce it, come back up and make it at least back up to like the 55 exponential or 50 simple, top of the range. Even if it plays out to, let's say we even go up to like 55,000 from where we're at right now. Well, you still end up with essentially like, realistically, what would that put us at? It's like an 8% move back to the upside, again with like a 3% stop loss. So, running stop loss is obviously key here. But in my opinion, we already saw the move play out. We were positioned accordingly for that move ahead of time. So now we don't have to get overly bearish now after the move has happened like the rest of the market. And then just looking at one other chart, this is another one we specifically talked about. Triple bearish divergence playing out on multiple indicator oscillators. Specifically talked about this too on the daily. This was the first time that we saw any negative selling. Basically, we saw like one little bit right here, one little bit back here, and now here we are, basically like flattening out, and now we're seeing it come in. Well, where were those key levels at? That was the head and shoulders dump that happened back here. That was the capitulation dump that happened back in March. And we haven't seen anything since then. So now here we're showing again at the top of the trend with bearish divergence. And then we did exactly what I said, pushed up once more to a higher high on spot markets. And now here we're seeing, more selling coming in. We have on the waddah explosion. And the way this indicator is calculated, it takes the volume of buying and selling, multiplies it by the price, and then subtracts it if there's more selling than buying, or adds it if there's more buying than selling. So essentially, and then the slope line is this blue or green and red line. So, essentially what it's saying is there more buying taking place than selling, or is there more selling than buying? Because price action doesn't always tell you that. Price can move up, but there's very little buying taking place. There's just no selling. Price can move down, but there's no buying taking place. There's just like some selling. So what this does is it figures out, is there actually more buying or more selling, and then gives you like a more accurate picture. And the idea is to tell you what smart money's doing. And that's exactly what it does. It does it very well. And then the waddah explosion is going to tell us trend based on volume and price action. So, here we have very clearly, heavy selling coming in, heavy selling coming in, heavy selling coming in, heavy selling coming in. When we had that previous 3 times of heavy selling, we had almost no times where the blue flipped over, the slope flipped over blue. Barely right here, never right here. And now here we have a very clear blue slope line on the selling, and it's escalating. It's getting higher and higher up. So as we're selling off, there's more selling off taking place, and the slope is going very clearly to the upside. You'll notice the blue slope, every time there's buying, every time there's buying, every time there's buying, there's like no blue slope when they're selling, no blue slope when they're selling, no blue slope when they're selling. And then here we have heavy blue slope when they're selling. So this is the first real selling that we have seen come in based on volume, in this entire uptrend. We have not seen selling with a blue slope line since back here. And when it was back here, that's when I was telling everybody we're about to capitulate right before the March dump, right before you could get Bitcoin one last time in the 3,000s. But, don't listen to me now. Don't listen to me now. If you didn't listen to me then, don't listen to me now. Because I'm sure I'm wrong this time. I'm sure last time I was going to be wrong, but there was a black swan event. So I'm sure I'm going to be wrong this time because somebody said Bitcoin 100,000 and I'm stupid. Whenever I see a red flag pop up, I don't just make up a reason why the red flag doesn't count this time. Why this time it's going to be different. No, I look at it statistically and say, well, last time that happened, we had a 60-something% market dump. So is it likely that we're going to all of a sudden capitulate? Maybe. I don't know. Maybe I don't know what I'm talking about, but a lot of stuff pointing to further downside. We could very easily close this above that low right here, and it would look a little more bullish. Nice little wick on the bottom, but got to be very careful here. We're at the danger zone. We've been at the danger zone. Been warning about the danger zone on daily and weekly time frames on spot markets and futures markets. Very clearly here, you'll see the difference now on the daily between the moving averages. Look at where the purple's at in comparison. On spot market, we were at the 89 and sold off very, very heavily below it, and then are finding support at it. On the futures markets, we haven't even gotten close to the purple yet. So if we came down to the purple, that would be 46 to the 89. If we sold off like heavy below it, it might be 41. So there's very clear difference here. And again, this is what we were talking about. This is our first cross of the 821 to the downside on the futures markets since the uptrend started. Since $10,000, it never crossed the downside, never crossed the downside, never crossed the downside, never crossed, and now here we cross. So this is what I call a change in trend, a change in the markets, change in structure. And that's what I pay attention to when I'm looking for actual, market reversals. And again, I'm not telling you should have sold the absolute top at 65,000 now in hindsight, because I was telling you that already. I was telling you already at 65,000. I was telling you already before we got 65,000, I was expecting us to push back up to 65,000, put in a new all-time high, and then sell off bearish divergence. So now that it's already happened, I'm just reminding you that I was right. And not to be a dick or anything, but, for people that are new to the channel or whatever, it's nice to know there's somebody who talks about this stuff before it happens. So very clearly looking at these areas, paying attention. This is obviously going to be closed here in about an hour, so we'll have to see what develops over the weekend. But we've closed now all the gaps. This was like we came down and closed the clear gap that we were paying attention to, that we had left behind, all the way back until at this point in time, the only gaps we have back here are back at like 24,000. So I'm not ready to say we're going to come back to these. As far as I'm concerned, these are breakaway gaps until we see like further price action to the downside. But at this point in time, I'm looking way higher than those gaps. I'm looking at 38 to 45,000 way, way more realistically than I am looking at like 18 and 24,000. So I know people all of a sudden, as soon as it gets bearish, people get extremely bearish. When it's bullish, people are extremely bullish. I'm like a realist the whole time. So let's be real here. This is, if there's a gift from the market and we get back down to 18 or 24,000, people aren't going to be looking to buy down there. They're going to be capitulating because they're going to think this market's dead. So, let's be realistic. If we see it break down from like 38 to 45,000, it's time to be worried that this thing is done, at least for this bull market, or at least for the next couple months, at least for the summer, etc. So, careful what you wish for. Next we have Doge. Doge, obviously, you guys already know what was going on here with Doge. I told you 50 cents was a key area that we could top out. Next one, 75 cents, $1. There were some fib levels along the way. I think, honestly, this was an overshoot of the 2.618. We broke down from that key support level. Depending what time frame you're looking at this, you could say the support was here. You could say it was right here. But, we very clearly broke down from it. Got a very strong sell-off back down to 16 cents. So, wiped out. I mean, there's buyers at almost 48 cents on this thing. So if it sold down to 16, you lost 66% of your money in a couple days. This is what I was warning about with Doge. Hard sell signal, multiple red histograms leading up to it. Can't say you didn't see it coming. It was very clear, demonstrating on multiple assets, multiple signals. There was no surprise here. If you got a nice buy off that 200 exponential moving average, off of the bearish control zone, off of the hard buy, maybe you're in a good position now, but I'm not convinced that this thing is done. I think once again, though, with Doge, as traditional markets close, I think there's definitely a possibility Doge gets a nice powerful move back up here, but, there's just as much potential to the downside if we see like continuation from Bitcoin, exponentially powerful. This is what I was saying about Doge, where, once you have a nice move, let this thing just kind of play out. It's okay to get out of your positions, take those profits, sit back, wait for it to develop. You don't have to jump right back into it because you made a bunch of money to the upside already. You 4x your money in a couple of days. You don't have to immediately jump back in and give back half of it or 66% of it, because you got caught. But again, that's my opinion. You can do whatever you want. It's not financial advice. Ethereum specifically spoke about how I expected Ethereum to come back up here, and look what happened. Look, everybody was extremely bearish again on Ethereum right here. And then what happened? It sells back down to $1,950. And what did I say? Buying support here, expecting the move back up to to 2600. 2600 new all-time high into the red box target in between the 1.5 and 1.618. And then look what happens. We get a massive rejection wick right there. And then immediately afterwards, the capitulation sell-off. This is while nothing else, well, I can't say nothing, but most other things were not making a new all-time high. Ethereum was, however, completing my algorithmic trade to the upside after the hard sell. And then, you know, obviously we got some nice wicks on stamp to the upside and to the downside, but this just reflects on volatility. When you see a massive buy wick come in like that, a massive sell wick come in like that, a massive buy wick come in like that, what are you going to say? Well, it's bullish here, but it's bearish here, but it's bullish here. Well, that's indecision. That's just indecision. That's all that is. Because now if we zoom out to a longer time frame, let's look at our weekly time frame, and what's Ethereum telling us? It's telling us indecision. You know, you're pushing up and you're pushing down, and then you're closing in the same spot. You're pushing up and you're pushing down, and then you're closing in the same spot. So, you know, on the weekly, we're up here in very strong bullish control zone. You know, still multiple green histograms in a row. Ethereum still looks more bullish than most things do. But, you know, if Bitcoin starts selling off, starts dumping right here, you know Ethereum's just going to do the same thing. I mean, I don't know what the actual push down from the top to the bottom was here. You know, 20%. So most of these altcoins are selling off less than Bitcoin still right now. So that means people are more bullish on altcoins than they are on Bitcoin. There's more volatility in Bitcoin to the downside than there is on altcoins. Does that seem realistic? Does that seem like how these markets normally react? Not really. Cardano, you guys know how I feel about Cardano. And, you know, Chucky Hoskinson, not a fan. This thing has looked like crap the entire way up. Massive bearish divergence here from this top point to this top point. Have we seen it play out yet? No, eventually I expect a wick like this, maybe without getting bought back up. This, you know, for somebody that's always forever working on something and always like hitting their benchmarks and has all this stuff like figured out, I mean, why isn't Cardano doing better than it is? I mean, this thing's not even at all-time highs yet. This is obviously the Kraken chart here, but, you know, I'm not seeing it. On the weekly, we exited the bullish control zone, got the hard sell. We're just kind of hanging out here right now, multiple red histograms in a row. I think Cardano probably goes back down. You know, obviously here it came back down to that previous high, exactly on that wick. I think probably like the fad in Cardano is probably over, at least for right now. It's supposedly doing all these things, but I never see anything actually like functionally useful out of Cardano. I just hear talk. So maybe one of these projects that they're working on, maybe one of these upgrades plays out. I got to see it technically though. XRP daily, you know, I mean, this once again, XRP, one of the worst performers ever. You still didn't even make it. You barely made it halfway back to your previous all-time high on XRP. So, you know, the XRP army gets so excited when this thing actually moves, but like 98% of the time, they're underperforming the market. And then 2% of the time, they're overperforming their excitement, but still underperforming the market. So still has not made it to its all-time highs. You know, sort of looks toppy here based on the knife. You know, got to stab up, sold off pretty heavy, got to stab up, sold off pretty heavy, got to stab up. You know, started selling off pretty heavy. Are we going to see a move like this where it capitulates back down? Or are we going to see like just a steady drain as people say, you know what, I'm going to get out of this thing because it is just absolute trash. The more talk there is of central bank digital currencies, the less, you know, fundamental explanation there is for XRP, because that's what XRP is supposed to do. I think people are realizing now with Bitcoin and XRP that there no existing government, no one world order, no whatever you want to call it, is going to just use an existing cryptocurrency and say, I'll adopt Bitcoin and put it on our balance sheet and we'll just base everything on Bitcoin. It'll never happen. They'll just copy Bitcoin and then, you know, privately mine it to secure the network, or, you know, create some sort of like consensus, or it just won't be like open source. I mean, it just doesn't make sense. And I think people are starting to realize this stuff. The same way that XRP is not going to take over for Swift. If they get rid of Swift, they will get rid of it for something else that's centralized. They're not just going to be like, let's all get behind the Ripple network and XRP. It will literally never happen. Here we had the hard sell coming out of the bullish control zone, followed by capitulation. This is where we took our long position. I told you guys ahead of time too. I was taking a position at 17 cents. I did. I've been selling the whole way up because XRP is trash and I'm not going to get stuck in it. But, you know, here we have same situation. Ton of red histograms in a row. Back down to the slope line. What's going to happen next? Well, maybe we bounce it, get a push back up, an attempt to save price action back up to like $1.40, maybe $1.50, maybe. But what's more than likely going to happen after that? A capitulation dump, maybe down to a new low, more than likely back down to like one of these previous like support levels. You know, will XRP be back at 70 cents very soon? Let me shake my 8-ball. It says yes. Yes, it's very likely. More than likely going back down to 70 cents. I think the XRP army has, so many of them have drank the Kool-Aid and actually died, that the cult is starting to thin back out. And then especially as they build like new fad coins, you can just jump into one of them and do better. So why wouldn't you? Why would you just stick with old shitty XRP? So Riot is next. Riot blockchain did exactly what it said. Broke down from that key level, that key support level, pushed back up. You know, it's getting rejected now at the key support turn resistance. So what's going to happen? You know, well, it's going to be closed over the weekend. Maybe Bitcoin jumps back up and, you know, comes back up to the top of the range. Maybe Riot opens next week back at the top of the range and then kind of oscillates. Or maybe it just gets rejected here and, you know, we see it gets crushed back down to the 200, back to one of these key levels. If I had a bet, I would say Riot will be at $26 before Riot will be over $61. I think more than likely it's going to dump back down here and see continuation to the downside. This is a crypto mining company, Bitcoin mining company. Not seeing it. MicroStrategy looks a lot the same way. You know, broke down from key support or is at key support, breaking down from moving averages, showing weakness. Bears are in control. Bears were in control previously. We saw continuation to a new low. You know, they're still in control. I think more than likely, you know, the premium just keeps draining out of this thing. 469 bucks, I think, more than likely. The 382, the 200 exponential moving average looks weak, still weak. I don't know who caught that debate between Michael Saylor on Stansberry Research, but, you know, in my opinion, look, you guys know I'm a realist on Bitcoin and gold and an investor, speculator in both. And I thought Michael Saylor got decimated. He came on there and answered no questions. All he did was like regurgitate the same stuff. He memorized like a couple little like stats on gold and performance. But, you know, there was like so many holes in his game and in his analysis, and he chose not to address like any of them. If you haven't watched it yet, highly recommend it. Daniela is, I like her because she talks about all the hot topics, but doesn't really put her bias in it. And then, you know, obviously she's an excellent interviewer. So definitely check that one out. And then looking at Coinbase, you know, Coinbase still looks like total trash. I told you on IPO day. Actually, technically, Coinbase I don't think was an IPO. Technically, I know it wasn't an IPO. It was a direct listing. You know, and there's two big differences too. Just kind of touch on that a little bit that people don't realize. Okay, an IPO versus a direct listing. What's the difference? Okay, an IPO, an initial public offering, is when you go public to try to raise money. You're trying to raise capital to invest in your company. As where a direct listing is sort of the opposite. It's actually a liquidity event. You're looking more than likely to like sell off your shares to the public. You know, there's not enough private interest at these prices. So you basically want to like dump some of your shares on the open market to like, not to raise capital for the company. You're not issuing more stocks. You're not trying to get people to invest. It's the opposite. You're basically trying to sell off some of what you have already. So one is a liquidity event and, you know, one is like for raising capital. So they're essentially the opposite. So, you know, maybe I didn't explain that like clearly talking about Coinbase and why I thought more than likely it would be a topping event or a selling off event, why it would be more bearish. But hopefully that kind of like sums it up to you. And then here, if we look at the daily, now that we have a couple days, you know, of development on this thing, what happened so far? It had a push up and then capitulated. Massive red candle. Obviously looks horrible. Horrible, 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 horrible. Closed at a new low, or open at a new low. Pushed up and getting rejected by the previous candle based on this wick right here. So 30 seconds this closes, and on the daily, how's it look? Still horrible. My first target got hit, $287. I know if you bought at $430, or even if you bought the low of the first candle at $300, you're probably like, this dude's an idiot. He doesn't know what he's talking about. But in all reality, let's be real here. Is anything changing in my opinion? No. I think you can still get Coinbase in the very near future at $255. I still think we come back down, or come down to the 2.618. And then from there, we'll see how this develops. Could we chop around? Could we see further price action to the upside? For sure we could. But nothing has changed for me. Since before this came out, I told people I expected it to be closer to 275 or 250. And now that it's out, it's done nothing that has told me that it's going to do anything but go to 250. So, but yeah, there we have. That's what I was going to take a look at today. I think we knocked out everything pretty quick. Trying to keep it short today, so I'm going to jump over in comments, and then I'm going to probably get out of here soon. All right, so let's see. Lazy Boy says, sell the news. Of course, ETH looks bullish to me. Yeah, I mean, it's somewhat bullish, but is ETH just going to keep running up to $10,000 while Bitcoin sells off? No. Does it look like Bitcoin's going to make a new high? No. Did ETH already make a new high and then get massively rejected from the exact area I said? Yes. So I wouldn't get too bullish on it. I would probably just think it was trying to complete an algorithm and then sold off. So I was talking about T and A. Is you only real competition? Oh, ass and titties? yeah, 100%, brother. 100%. T and A. Maybe up to fill the gap on CME. Yeah, it's a possibility, Lazy Boy. I'm assuming you're talking about the Bitcoin gap on CME. There's definitely a possibility that we come back up to fill that gap. You know, and that's exactly why I have this red box shown right here. Is, you know, in all reality, could we come back up to like 61, 62,000? It's definitely possible. It's definitely possible. But right now, I think it's less likely. I think more than likely, if we come back up to fill that gap, we're going to see a continuation to the upside. I think it's more likely that we see a short push back up to like 56,000, a rejection, and then further continuation to the downside, and then we just fill that gap when we're coming back up to make new highs. Does that have to happen? No. This thing could easily go back down to 24,000 before it goes back to 62,000. But at this point in time, there's not enough realistic evidence one way or the other to tell us that. You know, and I don't trade off of gaps typically on long-term time frames. I might trade like a reopening gap, like on like a Saturday or Sunday. But I don't trade long-term gaps. I'm not gonna see a gap get left open at like 24,000 and then the whole way up be shorting, expecting to come back to fill 24,000 or 18,000 or whatever. I trade the other way around. I'll trade like a Sunday gap, like Saturday to Sunday gap for like a quick move, like a scalp, or I will keep that in mind for once we start selling back off. So now that we have the 821 cross coming back in, you know, if we start to see continuation, I'm going to have my eagle eye on those gaps for sure. You know, because the majority of gaps do get filled eventually, and sometimes it is literally months or even years later before you fill a gap. But right now, I'm not overly ambitious for like a 24,000 gap. Let's be real. If Bitcoin dumps down to 24,000, that's probably it for the bull run. That's probably it for a lot of institutions. They will literally go trade something else and not care about Bitcoin or worry about Bitcoin. That's the difference between spot markets and traditional markets. Traditional markets look for trends to the upside, typically, or to the downside, and then they play those trends. Crypto markets is a cult. People literally, the majority of people trading crypto don't trade anything else. The majority of people invested in crypto don't invest in anything else. The majority of people interested in crypto aren't interested in anything else. So when crypto starts to sell back off, everybody else goes away. All the smart people go away and just trade or invest in something else. And all the crypto people just sit around and make up reasons why it's going to go back up soon. And that's why bear markets in crypto are so bad. Because all these people in crypto that are in this cult, that are just drinking the Kool-Aid, are just sitting around thinking, maybe today's the day. Maybe we bottom. Maybe this news will change everything and we'll go back up again. Meanwhile, everybody else goes on with their lives and just trades other markets, you know, and invests in other things and is still making profits. Only crypto people just sit in those markets and just get crushed for a year or multiple years straight without ever diversifying. I can't say only, because there was a lot of people in the THC markets, like cannabis markets, that were the same way too. They were like new to the stock market, invested only in cannabis stocks, did extremely well, and then just got crushed for years while everything else went up, and they wondered why. So there's definitely cults in all these different markets. Look at the gold cult. You know, gold went sideways for like a freaking decade, and people sat here and talked about how gold was going to go back up. Look at Peter Schiff. Like, he's in stocks also, but like, you know, he's been, if you look at an old video from Peter Schiff or Lynette Zhang or what's his name? What's the one guy's name? JP? I can't remember. Crybaby JB? Dude, you can look at their videos from 5 or 10 years ago, and it sounds like a video they made yesterday. Nothing is different in it. The system's going to crash. They can't keep printing money forever. Stocks can't go up. They're overvalued. Crypto is trash. It's not real. You can't hold it with your hands. They say the same thing over and over again. They've been saying the same thing for 5 years, for 10 years, for whatever. That's a cult. If you say the same thing and anything that's happened in those 5 or 10 years, nothing has changed your mind ever. You never got bullish. You never even like looked at the evidence. You're in a cult. And that's fine. That's completely fine. But don't be one of those people. Those are the worst kind of people. Like, that's why diversification is so important. You know, Jim Cramer's like little thing on his TV show is there's always a bull market somewhere. And that's it. There's always a bull market somewhere. It's way easier to make money in a bull market than it is, you know, in a bear market. Even if you're great at shorting, you can only ever go down 99%. Bull market, you can go up 20,000%. So you can always make more money in a bull market. It's easier to trade in a bull market. It's easier to bet on something going up. Overall, macro, the world is a bull market because there's always more people. There's always more money. So the likelihood is that things in the future are going to cost more than they did in the past. Now, there's things like technology that are macro, like, you know, deflationary. But overall, the world is like inflationary. Look at the population 10 years ago. Look at the population 100 years ago. Look at the amount of money that was in any industry 10 years ago. Look at the amount of money that was in that same industry 100 years ago, if it even existed. I guarantee you the numbers are only getting bigger and bigger and bigger. Stock market is designed to go up. Cryptos are designed to go up. You know, gold is designed to go up. Housing market is designed to go up. Everything will go up because eventually there's scarcity. Well, in general, because of scarcity. So therefore, it's easier to go long on something. So the best thing to do is ignore stuff when it's going down and invest in stuff when it's going up. And then when that stuff starts going down, ignore it, let time go by, and invest in something else that's going up. So, you know, and that's part of the problem that I have with like crypto in general, with crypto people in general, is they're just like so micro focused on one thing. They don't pay attention to anything else. So yeah, filling gaps is good for like quick little scalp moves, man, or for like targets. You know, and honestly, like, even if you don't trade them, you can look specifically at gap fills and how it reacts. If you see price action sell down to fill a gap and then it gets bought up aggressively, more than likely it's going to continue back in the predominant direction of the trend. And it was just looking for that consensus. Yeah, for sure, man. Good to see you, CW. Lazy Boy says yes. Just something to look at, but not do or die. Yeah, oh yeah, for sure, for sure. What do you think of Binance tokenizing stock market? You know, I think there's demand for it for sure. But, you know, the key will not be, it's not going to be like trading the stock market like regularly. It's sort of like after hours trading. There's definitely an art to it. And it's not going to be, you know, because more than likely what happens with stock market? You know, consensus. It opens back up. You can have like pre-market trading, after hours trading, etc. But what ends up happening, usually if you see a gap up in the stock market when it opens, you know, it comes back down and fills that gap. I think tokenizing the stock market is going to be the same way. I mean, it's going to be like buying, you know, it's sort of like, you're sort of like playing that gap trade is what you're doing, because it allows you, okay, well, you know, this stock, whatever it is, closed at a certain price on Friday and then traded up all weekend. So what's the trade going into like the Monday opening? Well, it's probably like the short back down to where it closed at, because more than likely It's not going to affect how the stock market trades overall. You're not just going to all of a sudden leave gaps to the upside and to the downside. It's probably going to behave exactly the same way. It's just going to have like an extra little like volatility aspect on the weekends. But I don't think it'll change much, honestly. It'll just be something fun to do over the weekend. I don't think you're going to all of a sudden see stock markets open 24 hours a day. I think most people, most normal people realize after a while, after trading markets, that you don't want that. It's too much information and you never get a break from it. I think that's why people like traditional markets is, you know, you got 8 hours and then you get to relax. You get your weekends off. You get to relax. And then, you know, you can do your homework on Sunday night or whatever and get back into it and you didn't miss anything. As well with crypto markets, it's like you can look away, you can go to sleep, you can do anything, and everything changes and you got to start all over again. Where would you suggest I read to learn about options? Currently, I only invest in longs and would be interested in learning a bit more to help with downtrend markets. Man, for me, I think options are, I would classify options as part of or close to one of the most complicated things in markets. So I would master traditional trading and then move into options. Because the thing about options that people don't realize is that you're looking at a whole extra variable, okay? You're looking at time. So you can be right on price going up. You can be right on price going down. But if you're not right on the time that it happens in, you're still wrong. As where when you take a long on Bitcoin or a long on Tesla or a short on Bitcoin or short on Tesla or whatever, all you got to do is be right before it hits your stop loss or before you lose conviction in the trade. So you're betting on one thing. You're betting on price up, price down, or, you know, it could go sideways, but that doesn't affect you. If you bet on price up or price down using options and then it just goes sideways, you're wrong. If you bet on price up, but it goes down first and then it goes up, you're wrong. You know, there's so much extra to it because when you take one variable and then you add in another variable, it's exponentially more difficult. And that's why. So that's why you can get extremely rich or extremely poor off of options. You're basically like levering yourself up extra on something that's less likely to occur. Because if you're betting on up down, there's 50% chance it goes up, 50% chance it goes down, and then you can start weighting in other things based on like the charts or, you know, the fact that typically markets go up, etc. So you could say there's actually a slight higher weight that something goes up over time. But if you're betting now on up down, or now you have to bet on sideways also, so up down sideways, and now you're taking into account time because you have to be right on time also. You know, I don't think that that's for most people. I think you should be trading markets for years and mastering them before you start trading options. Options to me is like the difference between, it's like the difference between investing in something intelligently or using leverage to speculate on something. And then on top of that, you're now not investing, you're now speculating with leverage. And then now you're speculating with leverage, but you also have a hourglass in the background running. And if your speculation with leverage isn't right in a certain amount of time, you're wrong. So, you know, you can learn about them, you know, look for buy a good options book. You know what I mean? Start reading it, relax, get to know it. Paper trade options. You can find, there's all kinds of awesome knowledge. You could get one of the free options courses or at least breakdowns from somebody on YouTube. Start looking into them. There's lots of good options trading books that you can get. But again, I would not get overly excited for options if you're not already like absolutely crushing markets. I would focus much more on trends and trend trading and then start learning about options. But I would not start trading options anytime soon, in my opinion, you know. And I don't know a ton about you. I don't know how long you've been trading for or anything. But the truth is time is the hardest predictor in markets. So to add that in to your trading makes everything much, much harder. Much, much harder. So if in something that you know, and again, I don't know you, I don't know your experience specifically, anything like too much details about you. I don't know how profitable you've been. I don't know how much money you have to gamble, to waste, to invest, whatever. But in my opinion, options the worst thing to get involved with. So many people, if you say you have 90 to 95% of people that trade fail, they lose more than they win. I think you probably have 1% of people that succeed options trading over time. You can have people that will succeed on an options trade and make a ton of money, but more likely than not, they'll give back all that money and more eventually. And I think if they continue to trade options, I think more likely than not, people take massive hits on options over time, and that you probably have like about 1% to maybe 5% of people successful over time in options. So if you're better than 99 of every 100 people, options is probably, you know, then you'll be good at options. But I think 99 out of every 100 people fail at options, honestly. But again, you know, it doesn't mean you can't learn about them. It doesn't mean you can't start using them to cover your positions. In my opinion, options are best for hedging. You trade actual markets and then use options for like when you're wrong, because you can be wrong 99 times in a row. And then when that one option hits and you're right is when you really crush it. And they're so cheap, you know, depending what you're looking for. If you're taking like way out of the money, like calls or something like that, or, you know, depending on what you're trying to hedge, essentially, it's the same as betting. You know, I will bet on, when I bet on like fights or something like that, you know, I will take like basically a parlay as an option. And the likelihood of success is very low. But if you're successful, the payout is so big that it makes it worth it. And it can cover your entire other positions that were more than likely going to happen. Because, you know, what happens with an upset, you know, on fighting, you might bet on 5 fights and they're all shoo-ins, but one of them's an upset. So you bet that as like essentially like a hedge, an option against being right on all your other bets. And then when it does play off, the odds of that happening, because you're betting one underdog in like a 5 option, like 5 bet parlay, pays off exponentially, that you get back all the sure thing bets you should have won because of this one crazy outlier. And that's the best way, in my opinion, to use options. Otherwise, you might as well just use leverage and not introduce time as a factor. But again, that's my opinion. But, you know, go out there, watch a couple videos, and then if you really take an interest in it, you know, buy a book from a notable author on options. You can learn all about it. The best thing to do is figure out what strategy you might be interested in by getting a general idea of options, and then dive down that rabbit hole and become a master of that specific type of options, you know. But in my opinion, options should be used almost none by most people. And if you are going to use options, it should be for like that hedge, for that outlier, for that like 1 in a million probability. The majority of your options positions should be losing positions until the one time you hit the lottery. That's how I look at options. Yeah, exactly, man. You can find tons and tons of books on options from notable traders, from people that have made millions, billions, whatever, on options. But usually they're like a super niche thing, and they're good at that one thing. And as long as that's the one thing you're trying to learn about, they're excellent. But the majority of options, I can't remember what the actual percentage is, but it's like 90 to 95% or 90% or something like that of options expire worthless. So if you're buying an option, there's already right off the bat a 90% chance it's going to be worthless if you just hold it till expiration. So now you're not only factoring in when you'll be right, but you're factoring in that you'll sell at the right time while you're right, or buy, or whatever, that you'll close your position at the right time, or that position will even be profitable, is extremely unlikely. Because, you know, there's a ton of, everybody knows that when everybody's on one side of the trade, more than likely the other side of the trade is going to happen, because there's more money to be made. It's easier to make money, and that's the way options are. If 90% of options expire worthless, then it makes more sense than not to be on the other side of that option. Therefore, it makes sense not to have that option, you know, theoretically. That's what it is. It's like a lottery ticket. Exactly, lazy boy. That's exactly what it is. It's like a lottery ticket. And you can buy it as a hedge. You know what I mean? You can buy it as a hedge against that crazy outlier position. Like, if I was going to bet on the housing market crashing, you're going to be broke before the housing market ever crashes. Because people were saying the housing market was going to crash a year ago, and for the last year, all it's done is go up parabolic. So you buy options and they expire worthless after worthless after worthless after worthless after worthless for the last year. And then they might expire again for another year worthless. But then when that one option plays out, that insurance policy, that outlier plays out and the housing market does crash, that option's going to pay you like a lottery ticket. But in the meantime, the last, if you bought one a month for 2 years, you had 24 lottery tickets in a row expired useless, worthless, and then one expires, and you make 100,000, million, whatever on that one ticket. So it's okay to lose forever as long as you're figuring out how to stay in the game in the meantime. But when you start trading options as your main primary way of investing or trading or whatever, you're going to be broke before you're ever right. Because like I said, if you're right one time, you better make sure that that 1 out of 10 options that expires in the money is worth more than the 10 you just lost on. And that's not the way you want to do stuff, because you might be wrong 30 times in a row and then right 3 times in a row. It's like flipping a coin when we say you take a 50% probability of success, but you want to make sure that when you are successful, you're successful more than 50% of the time, or else you're literally just flipping a coin. So if you can get your risk reward up, but you can survive the probability of success on, something that's 50% of the time, you can win. So if you take something that's 90% failure, so you have a 10% success rate, and then you flip a coin 100 times, it could go wrong 80 times in a row, and then go right 10 times in a row, and then go wrong 10 more times in a row. But if you didn't make it to number 80 coin flip, you just lost all your money and you're out of the game. So it's a lot harder trying to factor in a very low likelihood of success, plus time makes it even harder to succeed, just to get that lottery ticket. So in my opinion, it should be like your hedge. It should be like playing roulette. You go down to the roulette table, bet red or black, and then you put a couple bucks on 000 just in case. That's like your options. You bet on, up or down, and then you can put a little something on that 000, that options crash, that whatever, just in case. But again, not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Don't lose all your money trying to learn. You paper trade that too. Yeah, for sure. Definitely glad to share my insights, CW. Yeah, they're a lottery ticket, and that's fine, man. People love lottery tickets because you can just be wrong forever and then you finally hit and it changes your life. But, that's what a savings account is. That's what investing is. Think about it like this. If you took that same, people play the lottery every day. I worked jobs before where you literally get out of work and, maybe you make $100 for the day, and then people go straight to the gas station, buy a pack of cigarettes and $10 in lottery tickets. So you spend 10% of your money every day on those lottery tickets, and then, you don't win that often. But if you win once a year and you spend $10 a day, so you win $3,600, what'd you do? You just broke even on the year. You're not even up. Maybe you win $5,000, so you're slightly up. You don't just quit after that. No, they go back and they put $20, $20, or maybe they go back to 10. But regardless, in the end, what is it? It's a savings account. Even if you win back all your money, but you get it all at once, it seems way better to most people because they think I'm not going to miss $10 a day. But if I win 5,000 or, 3,650 once a year and I get back all the money and I just have a net even. I don't make any money. I don't lose any money, but I just get all my money back on one day. To most people, getting all that money at once is exponentially more valuable than just paying $10 every single day. So that's how you look at all. What is it really? It's a savings account. If you have the same probability of winning and losing and eventually you hit, but most people lose gambling, obviously. Obviously they wouldn't be able to raise money with the lottery for like schools or whatever the hell it's supposed to go to if they didn't make money off it. It's obviously a business, But in all reality, if you had a 1 in 365% chance to win $10 times 365 days, and you put $10 into it every day. So it was a dead even chance of winning. And eventually you got your money back. Maybe one year it takes 500 days and then you finally win, but you get back $5,000. All you did is get your money back. But it seems so much better because you get it all at once. So that if people looked at investing that same way and they said, well, I can just put $10 into this every day, well, using time value of money, instead of that $10 just going in and you spent $10 on January 1st and you spend $10 on, December 25th or, whatever, last day of the year, two extremes is all I'm looking at. That $10 from January 1st with the time value of money in an investment that's averaging 6% per year, well, it's going to be worth more than $10. So you're actually losing by just getting back all your money. If you just go and invest $10 every day for 10 years and you got back all your money at the end of 10 years, you actually got shortchanged because with time value money at, let's say 7.2% interest for 10 years, just because that's a nice easy number to use, nice round number. 7.2% interest with the rule of 72 says that after 10 years, your money doubled. So if you have an investment that's 7.2% and you put $10 into it every day for 10 years, by the time you're hitting that 10th year of investing at 7.2%, that first day that you put in, that $10 you put in for the first day is actually now worth $20. And the second day's $10 is almost worth $20. And the third day's $10 is almost worth $20 as well. So the closer you get towards that 10% period, the more of your maturity at that interest rate using the time value of money with that, key little rule of 72. And if you're not familiar with the rule of 72, we learned this in business class way back in college. It's extremely important for investing. It essentially talks about like the time value of money and allows a formula for your investment rate. It depends, obviously, if you have like daily, weekly, monthly, or yearly calculated interest. But essentially the idea is if you take the number 72 and divide it by the time period or the interest rate, it gives you the other variable. So if you want to invest for 10 years and you take the rule of 72 divided by the 10 years, you need to get 7.2% annualized interest rate in order to double your money in that 10-year period. And then alternatively, you take that same rule of 72 and you could say, okay, if I have a rule of 72, if I'm getting 36% interest per year, which is obviously unrealistic, but if you're getting 36% interest guaranteed per year, how many years does it take to double my money? Well, you take 72 divided by 36, it's 2. So it means if you have 36% interest after 2 years, your first $100 becomes $136, and then, excuse me, and then you get another 36% interest on that $136. Well, what does that work out to? Your money's doubled now. So essentially you can take any number and divide it by that. You can take 2% and the rule of 72, and what's it tell you? It's going to take 36 years at 2% to double your money. So, and that doesn't take into account, obviously, like, inflation and all that stuff. But it helps you to get the idea of how important it is to invest at a consistent rate over being successful, once for a shorter time period. Because anybody can have one massive gain, but the idea is that with investing, you're looking for sustained gains throughout time. So, that's how I look at that lottery ticket scenario is. You're better off investing than you are sinking something in a lottery ticket, because when you win that one time, it feels like you're winning all at once because you're getting like that one lump sum pay. But if you watch your money gaining over time, it has like a psychological effect on you. If you watch for a 10-year period, that $10 that you're putting in every day turning into, 20,000, 25,000, 30,000, 35,000, 40,000, 50,000, 70,000, 90,000, 100,000, 150,000, $1 million. It has a psychological effect where it encourages you to keep putting into it. As where the psychological effect of buying a lottery ticket every day and losing is the opposite. After a while, you start thinking, this is a waste. Why am I even doing this? I can't believe I haven't hit yet. Maybe I should put more money in. I got to be due soon. And it has like a negative effect on you. So it's like the difference between saving or investing and seeing something compound over time is like a net positive, and like psychologically helps you to want to like save and invest more. and therefore makes you more successful in time. As where taking a risk or gambling has the opposite effect. After a while, you start thinking, I must have the worst luck in the world. I'm never going to hit. I'm going to lose all my money. I'm never going to be successful. And then by the time you finally do get that payout, you're thinking one of two ways. Oh, my luck is finally turning. I need to keep gambling harder now because I'm finally winning. Or maybe I should just quit because I'm never going to win again. It took me so many years to just hit this time. So it has like, and then not to mention like that compounding negative effect it's had throughout the entire time that you're gambling and losing. So, and it's the same way when you gamble and win right away. You know, if you go to the casino and start gambling right away and you're like, oh, I'm going to bet, you know, $100 per hand or whatever. And then next thing you know, you're up $10,000. You start making ridiculous bets. You're like, oh, I'm going to bet 2,000 on this hand because I'm crushing it. And then next thing you know, you do that 5 times in a row and you're back down to zero. And you're like, what was I doing betting $2,000 a hand? I started $100 a hand. Oh man. And that's why gambling is so bad over time in comparison to investing, is because your risk is adversely affected. As where with like investing, it's the opposite. You compound a positive effect. With gambling, you compound like a negative effect, in my opinion. And that's why when people say, oh, you know, I'm gambling on this stock, or I bought so many shares, or so many whatevers, or, you know, that's like the gambling mentality. And that's fine, but it's not sustainable. Most gamblers are going to lose over time, as where most investors will win over time, as long as they're not investing in, like, no offense, but perfect example is Dogecoin. If you gamble on Dogecoin, you'll be successful. If you invest in Dogecoin, you're probably not going to be successful because 99%, based on previous experience, 99% of its pumps are given back entirely, like, you know, within a couple weeks or months. Yeah, some of the options limited, like on crypto exchanges, are shitty too. I mean, you know, most of the markets are, I don't want to say rigged against you, but the more complicated these things get, the more likely they are to fail. But you just get that payout one time. I'd rather be a consistent winner and win a little each time than be a consistent loser or have that lottery ticket mentality. Because that's really your three options. You know what I mean? You consistently win over time, making good trades, or you consistently lose over time, making bad bets. That's typically what happens to most people, you know, if they're betting versus like investing or trading intelligently. And then what happens, you know, with options, you're basically just making bad bets on purpose over and over again, waiting for that one good bet, you know, which most people get exhausted and never get that good bet. Or once they finally do, they act recklessly because they think they're like, things are turning. So in my opinion, small gains consistently over time are going to lead to a much better like state of mind also. I think with investing too, you know, you get to be a winner every day. You get to be a winner all the time. You get to watch that money build up, watch those gains build up. And then it helps you feel like you have something to fall back on. As where, you know, when you're gambling, you're consistently watching your stack get smaller and smaller and smaller. And then you finally get the big payday and you think, damn, should I just quit while I'm ahead? Like, oh, I'm finally even. All I got to do is win a couple more times to get ahead. Or, you know, I think coupling it the other way around, making smart investments every day and then gambling a little on the side is exponentially better because you have all the positive effects and then you still get that random lottery ticket like payday. Yeah, that's the most important thing to do, man. Learn from your mistakes. It's just like it's like anything. You know, there's like that old saying, you know, it's only a mistake if you don't learn from it. And that's exactly what it is. You're just look at it as like, you know, you can lose money in markets, but what do you really do? You're paying for your education. Is really what it is. So you don't want to come in paying for that Harvard education when you could have got that community college education and it's no different. You know, you got to get that community college education first, build a solid foundation, and then go to Harvard to learn options trading. You know what I mean? Go to the advanced level classes, pay the advanced level prices to learn the advanced level stuff. Don't pay advanced level prices for like, you know, street knowledge you could have learned off of anybody. And that's how I look at, like, you know, not saying community college is like street knowledge, but let's be real, you know, you can learn that from anybody. You don't need to pay those Harvard prices. So, but I think that's enough, fundamental, technical knowledge bombs, whatever, for today. I want to keep it relatively short. I'm looking to eat something here. Got like a weird food schedule going on. So I'm going to probably call it there. Get out of here for today. Appreciate you guys showing up today. Appreciate all the positivity, all the comments. I hope everybody did well in the markets this week. I hope everybody avoided the nice little dump we saw in cryptos. Sticking with my guns here. I think there's more than likely going to be positive price action over the weekend, but I think we're probably just going to move up to a lower high and then see like continuation to the downside. But again, I mean, what statistically, look at the probability of Friday after markets close being bullish in crypto and Saturday being bullish in crypto till about 11 or 12 at night. I think if you look at every weekend for the last year or 5 years, at least since options trading, at least since futures trading was open. I think if you look at statistically, every Friday after traditional markets close, and then every Saturday up till like 11 or 12 at night, roughly, you would see at least 75 to 90% of the time Bitcoin and crypto move up. At least 75, probably closer to 90% of the time, they move up. That's not some anomaly. I'm talking about actual data every weekend for years. You know what? Since, let's say, the end of 2017, beginning of 2018. So, excuse me. So all of 2018, all of 2019, all of 2020. I want to see somebody make a chart of every price action on Friday, like afternoon/evening to all day Saturday. And I bet you 75% or more of the time price action moves up. So is that the easiest trade ever to take with the highest probability of success in crypto? Yeah, I think so. Is it going to work 100% of the time? No. But do it, 12 weeks in a row, and I bet you win 8 out of those 12 weeks. So, but again, not financial advice. I'm not telling you specifically to do it. Crypto is going to zero, obviously. All markets are going to zero, and only, I can't even think of anything that's contrarian to what everyone else thinks. Only flat earthers are going to make money. Everybody else is going to lose everything because the earth is flat and everything's going to zero, and XRP will be the new world currency. And if you don't understand that, then you don't believe in Cardano. So that's like the statement I hear from people. XRP is going to $1 trillion. Cardano is it. Charles Hoskinson is the savior. It's so funny hearing people. So funny. Seeing these videos. Hindsight TA. But that's it, guys. I'm out of here. Crypto Trend Trader. Week market update. I'm out of here. Everybody have a good one. Enjoy. Appreciate you guys. Definitely appreciate all the positivity and everything. And we'll see how this next week. We'll see how the weekend goes. And I'll see you guys on Sunday night. And then we'll see how next week looks coming into the week and our weekend developments. And, chances are we're probably going to leave a gap on the weekend. And chances are we're probably going to fill that gap at the end of the weekend. So, but we'll see how it plays out. God bless you all. Appreciate you, brother. The earth is flat. I love it. All hail XRP. Guys, don't drink the Kool-Aid. I know I said it, but I was joking. I'll see you guys Sunday. Good to see you, our kids. Everybody have a good one. Enjoy the weekend. Enjoy those fights. 3 title fights this weekend, man. Damn, it's going to be awesome. And I know people sometimes have asked about my picks. So I'm going to give you my picks for this weekend, actually. Just on the 3 title fights. I'm not going to get into all the parlays and all that stuff as well. For those of you who do like gambling out there or whatever. I think, I really like Thug Rose Namajunas, but I think Weili Zhang, I think Weili is going to take her down. I think it probably goes the distance. 25 minutes. It's going to be a banger, I think. Maybe Weili gets the finish. We'll have to see. But I think Weili gets the win on that one. And then Masvidal Usman. I love Masvidal. He's fun to watch. He's got like those Conor McGregor vibes. He's exciting. He's an OG in the game. I think he's honestly an awesome fighter. Masvidal definitely has a chance to win. he probably has a higher percentage chance of beating Usman than anybody else does. But facts are facts. Did enough change in Masvidal's game to win? Did his cardio make the difference? I think Usman's just going to sniff his crotch and rub his feet, honestly. I don't think enough has changed. Can Masvidal catch him and get the W? Yes, but I think more than likely Usman wins. So we got Champ winning. Wei Li keeping her belt. We got Usman winning, keeping his belt. And then, of course, Valentina, Twinkle Toes, Shevchenko, the Bullet. She's going to win. Let's be real here. Jessica Andrade, just because she came back with some thicker thighs. She's moving up a weight class. Shevchenko's longer, wants to keep the distance, better striker. Shevchenko's going to smack her down. So I think all three champs keep their belts. If I was going to bet on one upset, who would it be? Probably Masvidal. I'd probably throw it on Masvidal for my upset. For my options trade, I would probably take Wei Li, Shevchenko, and Masvidal. And, that's a perfect example. You bet all three champs. You can put $100 on each champ to win. And then you could take $50 and put it on, the two champs you think are going to win and the one possible upset. So if you win on all three of your champ bets, all three champs keep their title, which is more than likely going to happen. You win across the board on them. But in the event that you pick the right upset, chances are two of those champs are going to win. So you already won on two of the three bets. And then on top of that, you potentially get that upset bet as well. So you can lose your upset bet consistently, but you're winning based on the champs. But again, it's all about that risk reward probability and then position size. Because if you put too much on the upset, you're not going to be able to keep betting on upsets because you're going to keep consistently losing money even though you're right. So that's like your options, but in like MMA. So there's my picks for the weekend. I think all three champs keep their belts. But if there is an upset, I think it's Masvidal. But that's it, guys. I'll see y'all. Enjoy the fights if you're watching them. Enjoy the weekend with your family. Stay safe. Stay healthy. Stay smart. Learn in these markets. Protect your principal. Protect your capital. Take those gains. It's not real unless it's realized. Don't take risks when it comes to your hard-earned money. Crypto trend trader, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And I'm out of here. It's dinner/lunchtime. Peace.